button.
There it is.
Oh, yeah.
Okay,
Thank you.
so we're
Thank
recording.
You, thank you.
So Ron, you're on.
Well, in the old days, we used to park and then we get our breakfast and all of that stuff. So no rush, no rush. Hey, now don't expect this to be 100% organized. I'm not going to bring up a 200-page slide presentation. This is a kind of brought up topic by topic off the cuff. Now, I'm going to suggest we cover each of the topics before we jump into a lot of questions, but I'll probably cover some of the stuff. But starting with one thing that one of the three things that Louise has mentioned last week, I guess it was. First of all, entities. What do you do in terms of setting up a company for your business? And the answer is it obviously depends. So let's talk about why you set up a company. Because each one you set up does add complication. There's going to be a balancing act. I'll kind of talk about after the second topic or during it. So the entities available, and Louise, I have to apologize. I have to stick with US here just because we get complicated the hell out of this. There are differences by each country. Fundamentally, or the basics are the same in every country, and I've worked in many. I can cite some differences in terms of how they're done, but basically most countries have followed this model over time.
Right.
And if you read a wonderful book by Kiyosaki, Rich Dad, Poor Dad, some of the entities, the most important entity we'll talk about wasn't available back then. So he will refer to a business always as a corporation. But that is no longer the best option. But anyway, entities, the vast majority, and let me say it's 95%. I don't know if that's 93, 99 or somewhere in there, but let's call it 95% of small businesses never set up an entity. And that's okay. It really is okay for most people. So the principle here I'm going to try to follow for these few minutes is KISS principle. Keep it super simple, or keep it short and simple. But I'm not going to use the other version. The idea is, why do I want to set up an entity? There are really two main drivers for setting up an entity, other than doing the work under your name or as a sole proprietor, which is the term we use for somebody that's not set up as an entity. They're doing the business. They are the business. First reason is asset protection. Okay, it's kind of covering your ass, as the assets, as they say. That is the first and probably the biggest. And there are many situations where that's real important. The vast majority of people, though, don't have that problem. And I suspect in the business you're looking at, Louise, and most people on this call, maybe Tom, myself, exceptions, do not want, that was loud, Bruce. Don't want to, Bruce is tearing paper here. Don't need that asset protection. What I mean by asset protection, where your business is separated from you. If you are your business, if somebody's going to sue you because they don't like the way you do business, they're going to sue you. And there's not much you're going to do about that other than, fight it in court. And we've had that happen. But if you have a business that has risks to it, major risks, and we happen to be in the real estate business. So let's say a client of ours that's in the lease portion of their contract with us falls out the window during a party, or somebody gets shot at that house. Guess who they're going to go after? They're going to go after the person they perceive to have big pockets, which is the company owning that property, not necessarily the person that shot the gun or is living in the property or has let those people in. So landlord-tenant risks are huge. So setting up entities to protect ourselves personally and the company from all of the huge brunt of the risk is important. But most people don't have that. If you're doing the business, you are the business. I mean, what's the big deal? Now, the second is for allowing partners to be co-owners of the business. And that's a second good reason. If that's not the case today, then I would start with a sole proprietorship. And you can always change the main forms of entity, sole proprietorship, where in essence, and the second topic is taxes, where the taxes are done as part of your personal tax return is the most common way people do it. We'll take a survey later of who's doing what, but the vast majority will do that. The other entities do not necessarily, only one structure. You can set up an LLC where you and a spouse are sole owners, and that still is what we call a check the box entity, where you set up an LLC. It has this all fancy name. You have your separate bank accounts and all of that good stuff. But the entity still is still registered on your or taxed on your personal tax return. I have one company like that where it is a consulting company that does work. And if we show my org chart, I can mention that. Well, that flows to my taxes because I am, and my wife and the family is the primary motors that make that thing work. Okay, Brad does have a copy of the chart. So here's what most people do not want to go through. In my case, it was a necessity. We had to separate properties. So if one person did get shot in a property and they sued us for $20 million, the rest of the company would continue to operate, and they would have their liability would be limited, by what that company owns, the owner of that property. So, basically each of these, let's say all but one, own properties, okay, or make loans, or some combination of the two. So if I have currently one property owned by Avon One LLC, then, and we've multiple in there. Each of these companies change over time as we buy and sell properties. But Avon One LLC would have its own limited liabilities. They're named, by the way, if anybody's curious, for the cities that they do business in, or the proximity of the cities. We don't have every city separately. And so Avon One, if that client did have some major risk problem, the lawyers are going to be limited by how much Avon One's assets are. The other entities are segregated. They're separate legal entities. They have separate P&L statements. They don't have the same checking account, all of that stuff. So again, because of our risks, we have to do this. Now, I mentioned that there is a company that flows to my personal tax return. That's the one in the upper right, Productivity Partners. Productivity Partners does all of the accounting, marketing, and everything else for BI Solutions Corp. BI Solutions Corp is the parent company, is basically an investment fund. It's a corporation, but it's really an investment fund. Investors put their money in, they get checks from there or from the entities, and there are no employees of BI Solutions Corp. There are officers, there's board of directors, all of that kind of stuff, but none of them are paid by BI Solutions Corp for the work they do. There are shareholder dividends and stuff. We happen to be sending those out right now. Okay, but Productivity Partners is an entity not owned by BI Solutions Corp. It outsources the work. So my company personally charges BI Solutions Corp for all the work we do. The structures isn't important, but we're basically outsourcing accounting, marketing, sales, you name it, all of the administration for BI Solutions Corp. And that company flows to my personal tax return. The BI Productivity Partners doesn't create a lot of liability. Worst case, somebody can sue me that the tax return was filed incorrectly for BI Solutions Corp, and Productivity Partners did that filing. But that's about it. So IRS you can deal with. Errors can be fixed. But all of the properties are protected in individual LLCs. Now, in our case, we have also the Ronald LLC, which is primarily a lender. Great name there, the Ronald. And it has 50% ownership of some subsidiaries where we partner with people, and then we've added a fourth one there. But those are joint ventures. Private mortgage lending is what that stands for. So PML JV, and that's the actual name, but stands for private mortgage lending joint venture. 101, 102, 103. Now we have 104. Those are larger investors that choose to partner with us on deals, and everybody can own different amounts of every deal. It's just a very flexible way to do things. We don't do a lot of our business that way, but again, we set up an LLC because that files its own tax return that has joint shareholders. The Ronald LLC is one of them, and then the other investor is a partner in that company. So again, because we're partnering, that has a separate entity and a separate tax return note. We'll talk about that in a second. Okay. So my advice to most people, start with a individual entity. If you outgrow that, you want your separate checking accounts, you want to separate everything totally. You're still going to do your separate accounting. We'll get to that. But then you would set up this LLC that is owned by you, your spouse, and therefore it flows to your personal tax return.
Hey,
Okay,
Ron?
corporation's much more complicated. Yes.
Ron?
Yeah.
So before you go on, one other aspect, that is usually covered at the same time that you're doing an entity is the trademark.
Yes. Oh,
Usually.
good point.
So
Good point.
even if
Thank
you don't, do an LLC, any type of corporation, you still want to make sure that your trademark, your name, basically is unique enough that you're not using somebody else's. It's usually taken into account at the same time that you're doing your corporation. So even if you don't do a corporation, you certainly should do that. And so you're not stepping on anybody's toes, and someone else doesn't end up stepping on your toes when you become rich and famous, So
well
Right.
done.
just a thought.
No, very important point. As a matter of fact, if I were organized, that would have been one of the ones when I said setting up a separate LLC. That doesn't mean you can't do your sole proprietorship with what we refer to in the industry as DBA, doing business as, and that's the official term used by the IRS as well. So when I file the tax return, my personal tax return, it has an attachment US called Schedule C for productivity partners. And when I send out to people or vendors of ours that have or not vendors, people that hire us that have to send us a tax filing and information return that says they paid us X amount of dollars this past year, they will actually file it to Ronald Naraki, DBA Productivity Partners, and that's how the IRS views that entity. Now, in that case, it is an LLC, but you can do the exact same thing, a DBA or a trademark name that you can reserve in Arizona, and every state is different. To complicate the hell out of it, so U.S. is one bad enough to try to cover it, but each state's different. In our case, this Secretary of State will no, I'm sorry, it's the Corporation Commission in this case. Will reserve a name for you, and then the trademark is done through the Secretary of State. But you can reserve the name. So BI Solutions Corp, had we not formed it like the day that we decided to do it that way, then we would have filed, and we may have filed a registration, name registration, and you pay a small amount, $20 or something like that, to reserve that name. And you can continue to operate under that name, as Bud said, without forming an entity. So yes, that would be something I would suggest. So I'm going to use the entity Wonderful Cards, for example, as a DBA. You don't want everybody to pick up and use that name after it's become popular. So you go ahead and register it in your province or wherever it's done in Canada. Here it's done at the state level, so that nobody else can use that particular name, Productivity Partners. Once we made it an LLC, then the LLC is tagged on there. So
right. So,
Good
just a point. If you apply for an LLC and a name, and it's close or something, the Corporation Commission or whoever you're applying to will let you know that you can't use that.
correct.
Right.
Although interesting, I was just looking at one yesterday. There's Artisan Builders. There's both an Artisan Builders LLC and an Artisan Builders Inc. Coincidentally, they are in the same business. So I was surprised something like that went through. But because they have two official designations, one's an LLC, the other's incorporated, obviously it's going to cause confusion. But the Corporation Commission decided to allow that. But you're absolutely right, Bruce. They will let you know that when it's tromping on somebody else's. So if you want to use Apple LLC, because you want to call your cards Apples, you're not going to get away with it. Okay, that ain't going to work.
Right.
Yeah.
The other one that was popular before was, for example, Bud might try Consulting R Us, and that was stomped by the Toys R Us.
Yeah, the other thing that I would mention is if you're, choosing a name and you're going to, trademark it or register it, you check on the internet, not just your state or your county or whatever. Check the internet, period, because once again, if you get larger and there's confusion, people are going to come after you. And sometimes you're just going to get a letter from somebody and tell you just stop using it,
Understood.
you know, there's a warning letter. So check it on the internet totally and get that URL, you know, so that just makes it so much easier. There's nothing to it.
Yeah,
Okay.
good point. Web names, domains have become to some extent a form of registration, and that you will get precedence over that name if you have the domain with that name. If not, the person that does tends to get the preference. So anyway, good point. Good point. Any questions on entity kind of stuff? And you know, as we later on go through everybody's individual situation, my guess is most people operating as a DBA.
Yeah,
Oh,
without
Don't you get your
confusing,
tax ID number the same time you get your LLC?
At the LLC, yes, that is correct. But for the DBA, you do not need one necessarily. You can use your own tax ID. Now that, okay, well, let's talk. I'll move that into taxes, but that's another aspect. These two tie together. That when, again, if some of the people are paying you large amounts, if you had a contract with a company and they are hiring you to do, 1,000 cards a year, and you're designing them, doing the work, and they're paying you, $10,000 or whatever else for that, they're going to have to send you a information return. In that case, one of the reasons for setting up the entity is taxation, and well, they all tie together exactly. But Chris's point's a good one. You don't want your tax ID necessarily to be revealed, and therefore the LLC ID is given out. Even though, so productivity partners, when a company is paying us for something, there aren't many examples because we're pretty much focused on BI Solutions Corp. BI Solutions Corp has to, but then it'll say again, Ron Naraki, DBA productivity partners, but the tax ID will be the LLC's tax ID. It will not be my personal tax ID. So it avoids a certain amount of credit protection from your tax ID going on. Quite frankly, somebody stealing productivity partners tax ID won't help them much because it's not tracked by credit agencies as a company ID. So anyway, there are side things, but good point, Chris. That is another advantage of the LLC, but I think I'll cover that as part of business taxes. Okay.
only thing that I'd like to chime in on here again is, in particular for Luis's, you can't see this chart probably, but 99 point plus companies don't have anything like this.
Right.
So this is extremely involved, and all you need is the top one, which is the name, and register it and get started.
Okay, awesome.
Correct. In our case, it's
So
not a
honestly,
shell
that's-
company. No intent. It's real.
The only thing that I've done thus far is to register my name.
Perfect.
And then I'm like, oh, I know if I earn 30,000 in a year, I have to have an HST number. But other than that, I didn't think about like the tax information being revealed. Right now, I don't have to worry about that, but I may
Sure.
have to worry about that
Downstream.
soon if I start doing businesses with companies. So yeah, that's really good. Thank
But
you.
it's
for all
downstream.
this.
You can add that anytime. It's not like you have to do it day one to do that. And by the way, our org chart wasn't quite this the concept was set up immediately, but our org chart didn't start this way. When I talk about the finances, we'll talk about how we physically got it started, even though this was the design we were heading toward. Okay. Shall we move to business taxes, and then we can always switch back to these things, but the business taxes tie in directly with this. I don't know if you want to take that off the screen so people can see each other better than a bright white screen. Well, that's bright. Okay. Business taxes intricately tied with, or intimately might be a better word, tied with the entity you choose. But again, most sole proprietors are going to want it flow to their personal tax return. Otherwise, if you have an entity owned by more than one person, in other words, one legal person, called a couple is a legal person, but if it is owned by more, like our JV companies that I'd mentioned on the chart, that's one of the reasons we brought the chart up, is it has to file a separate tax return. So now you have a balancing act. Do I want asset protection, or do I want lack of simplicity on my taxes? So that balancing act impact is real. Somebody that specializes in asset protection and would set up our entities they'd keep the same structure. They'd add, for example, a trust in there as a co-owner of every LLC. And all of a sudden I would go from filing 3 or 4 tax returns a year. We would be filing 20 tax returns a year. And that has a cost with it. And trust me, it has a cost with it. Now, would it be better protection for our assets? Yeah, in theory, the way we've got it structured is kind of a 99% bulletproof. So, going the extra mile is a little bit tough. I don't know if Chris is swatting flies there. It looks pretty funny, though. It might be somebody walking by his desk and he's telling him to go away. I don't know. We won't get into that. But anyway, so whether you do an LLC that's, taxed to your personal return, or you just continue to operate as a DBA, a sole proprietor with it flowing to your tax returns, none of those affect you beyond a schedule that might be, in our case, again, the US, it's Schedule C that's added to your tax return. Now, once you have an LLC, again, if it's owned by your own, just a couple, you will literally, in filing for that LLC, also file a return with your tax revenue agency, IRS in the US, that says, I am treating that as a sole proprietorship. If it has multiple owners, you don't have a choice. You now have to choose what kind of taxes do I want to apply. And there are only 3 others. So, when people talk about taxing corporations more, and of course, we're going to hear a lot about that from various governments around the world forever, then, in the simplest form, if they realized what they're talking about, they would realize that they're basically stupid. But it sounds good, right? Tax corporations. But, so our corporation is taxed as a separate entity, but all of the taxes flow to the individual shareholders. So anybody that owns shares in our company, and I think I can mention that Tom's one of our board members and therefore has some shares. He gets a very complicated form called a K-1 that he has to file, with his taxes. Now, it's not a huge, but it's one of those accountants go, oh God, not a K-1. They just, when you're doing their taxes, it just adds some complication. Not major, software handles it these days, but nonetheless, that flows to individuals. So most of the all of the tax impact of what we do flows to individual shareholders, which is also positive because there are tax deductions, huge tax deductions from our company. So anyway, tax a corporation means that the shareholders basically pay it. The individuals that own the company pay it. The LLC, if it's owned by multiple partners, does have to file a tax return. And now you have a choice. And within the US, we can tell the IRS which we're going to use. It can be set up as a partnership, which has the same complicated form K-1 at the end of the year. It can be set up as an S Corp, a shareholder-owned corporation, or it's set up as a C Corp, a real corporate corporation, where it pays its own taxes regardless of the shareholders. And that is what the government talks about really taxing. But, it turns out 1% of all companies are C Corps, and it is the worst thing you would consider in a new business because on top of the company paying taxes on any earnings, if you have losses, you can't deduct them on your own tax return. Okay, whereas the other structures allow you to deduct those losses against your own income. So C Corp is one of those things you've got to be first crazy before you consider it. If so, now you're going to talk to some tax people to say, why would I want to consider this option? But it's strictly if you're fairly large, you want to totally separate yourself from the shareholders. They have it simple. They either get a dividend or the company files a loss and therefore gets no tax benefit. So anyway, C Corp is probably the worst of the possibilities. And by the way, if you do have a profit and you want to share it with the shareholders, you now pay double taxes. So the C Corp is a tax filing method. It is not a type of entity. It is strictly how you file taxes. Same with an S Corp. S Corp, it flows to the tax holders. We are an S Corp. And the partnership flows 100% to the taxpayers. But again, those were strictly, if you needed limited liability, consider it. If you really are just crazy, consider a C Corp. But otherwise, I can't imagine anybody would want to have a C Corp. It is required if you're going to be on the stock exchange. That's about it, because then your shareholders are scattered all over the potentially world. So in terms of taxation, KISS principle applies. Keep it short and simple. Keep it super simple. And that would be stick with an entity where it's owned by you personally, unless you eventually have partners. Let's say somebody buys into your company. Okay, now it's going to be an LLC most likely, and it might be set up as a partnership, S Corp or C Corp. Again, those are US terminologies. I can pretty much assure you that Canada and every other country in the world has equivalents. US may be more complicated, but there are equivalents. Certainly the sole proprietorship and the LLC are, every country I've worked in, most of them are civilized countries, they have those structures. Okay, so keep it short and simple. Set it up, as you said, as a DBA is fine. If you want to set up the separation of the entity for privacy purposes, for example, the tax ID that we talked about, then the LLC might make sense. It will require its own tax return and therefore a separate tax ID. But otherwise, it's not that bad. And I won't tell you how much LLCs cost, because that varies even by state within the U.S. In Arizona, we're very fortunate in that you file for an LLC. It's a one-time event. Might cost you anywhere from, now it's pretty much 85 is expediting your filing is now required. So it's $85. In California, there's an annual fee. So, all over the map in terms of that. But as you complicate your entities, add shareholders, you will be adding tax returns. So again, start as simple as you can. Any questions, any comments on that one?
Nope, I'm really glad I can just keep it simple and just do it with my own taxes.
Yep.
And then that way I can just have a separate bank account for my business.
Mm-hmm.
And like doing business as, I'm hoping I can just do a separate bank account so it's easier to track, and then I can account for both. And like, it doesn't have to get, like, I don't have to be incorporated is what I'm hearing, which I'm happy about.
Absolutely. Yeah, no, you do not. It's very rare these days that anybody sets it up in an actual corporation. Most people do an LLC, and there's some good reasons. Actually, LLCs has more flexibility than the others. Corporation can't be a partnership, for example, but an LLC can be. So lots of things, those kinds of things, if you send me an email or something, I can usually answer them. But at this point, don't complicate your life. Don't talk to an accountant, or they'll tell you need all those things because they want more business. Okay. How about the pièce what's the des resistance, the tracking your money flows? How do I do that? What's the best way to do it? And by the way, I've done them all, anywhere from manual to spreadsheets, to various software packages, including multi-million-dollar software packages. Of course, the corporations I worked. I'm a finance guy, in case you wonder. Personal advice, and this is my personal opinion, backed by lots of experience with it. I would suggest, the small cost that it is, you can start with a spreadsheet. You can start with paper. That's okay. And probably for this first year or two or something, you might be okay with that. But I highly recommend doing something like Quicken. And there are a couple other packages that compete with it. I think Money was one of them that's been bought up by somebody. But Quicken is a software package, simple to use. It is an electronic checkbook. By the way, it is electronic checkbooks. You can have multiple. You can have separate entities. It does have some, but limited, multi-currency capability. I do Productivity Partners tax returns I don't, but our accountant does it in Quicken. We do our joint venture accounting in Quicken. The corporation uses QuickBooks. We really don't have a choice. We're dealing with 20 separate entities and trying to keep track of everything by entity as well as by property and those kinds of things. So QuickBooks and any of its competitors are true accounting systems, double entry. If money is coming in, it's got to be coming in from somewhere. If it's going somewhere, being transferred, there are always two sides. Quicken is like a checkbook. Money came in to this checking account or this bank account, and now You just track it to what's the category? Is it an income? Was it a reimbursement of expenses? So you don't have the complication of setting up a chart of accounts as you do in an accounting system. Quicken is easy to start. I highly recommend setting it up for yourself personally. And by the way, your personal stuff, so that's how you learn it, is do your personal stuff. Set up your own checking account. You can have your company and your individual stuff in there. And therefore, the bank account mixing is not a big deal because you can actually separate the expenses, even though they flow to the same bank account. Now, I'm not suggesting that's the best way, but they can be because you're categorizing that. Was that in my case, we'll start the category with PP. Was it a PP income? Was it a PP expense that we just paid? Or was it a individual? And each of those is separated. So even though my bank account might be a mishmash of transactions, and again, mine, I'm going to use mine as a general, ours is separated, but even though it would be a mishmash, I would still run my P&L reports separately for those. Okay. I could even set up sub bank accounts if I wanted to. So Quicken's very, very flexible and so darn easy to learn. It's basically take your checkbook, stick your transactions in there, start with the beginning balance, and you are an expert in Quicken in about 17 transactions. My current wife, former girlfriend at the time, helped me get all of my personal finances into Quicken. And that saved me eventually 1,000 hours a year or something in inputting it to my tax return, because U.S. is complicated. You have investment transactions, as Mark would know. You have to report them. Now, either your financial entity is providing you some summary, but that may not be sufficient for things you bought and sold. You actually have to track it, and you have to report those and enter them in your tax return. I bought these number of shares on May 15th, 2005, and I sold them last week at this price. So re-entering all of that, I was literally doing thousands. I was managing a small fund. I was doing thousands of transactions a year, and all of that was transferred automatically to the tax software. So Quicken has all sorts of neat features. By the way, your bank statements are not manually entered. You can download them. So it really is powerful. I don't know what it costs, $60 a year or something like that. It used to be one-time expense, and then you update it every 3 years in order to be able to automatically download. I think now they went to a yearly subscription, so additional cost. But talk about trivial costs, $60 or whatever it is for a package of Quicken. And it will, and by the way, if you don't pay the $60 a year, it will continue to function. You just can't download the stuff from your bank accounts automatically. So I highly recommend getting it. Like I said, start with your personal stuff. Decide if you do set up a separate bank account, great. If you don't, then just track the expenses, the incomes, all of that separately with different categories. And you can set up unlimited categories. They're not numbered, they're actually named. You choose the names. Quicken has a basic structure in there if you want to use it. If not, you set up your own, and you complicate it over time. You don't need to set that up day one, an accounting system. You do. You have to enter all of those categories, and QuickBooks for the most part has been a pain in the neck, in that when you create a category, an account, and you want a similar account with a slightly different name, go type it in again. They don't have a copy function. Quicken does. So you can actually copy accounts and then just rename them. So that would be my advice. You can do the exact same thing in spreadsheets, and trust me, you're going to spend more time. You can do it on paper and say, here's what my company expenses were and incomes were. And I got to tell you, that works pretty well when you have 2 transactions a month. It does not work so well, and you have to add them and subtract them manually. Okay, now try to run a report off of your paper document. That means you got to type it into another version, or even for spreadsheet. Now I have to have summaries go to another sheet. Quicken has built-in reports, and you can build your own, telling you what's in accounts. And in essence, your balance sheet, which is not critical to most businesses, it is to us. Then it's your account is part of your balance sheet. But if you are a large company and you've got to deal with shareholder equity and all of those things, that is not handled in Quicken.
Hey, Ron.
Yeah.
Do you know as to whether Quicken has an app?
I do not. I don't like phones, but I can tell you it is very, very, very likely. And interestingly enough, Quicken, TurboTax, QuickBooks were all owned by one company a few years ago, and Quicken has been spun off. A separate private company bought it, and obviously raised the price. But so it probably has concentrated on Quicken and its capabilities. And my guess is it does. Of course, for your accounting work, the phone's not going to be sufficient, but to enter a transaction, put a note on it, change the category while you're on the fly. I would think it is there, but I don't know personally. Again, I don't use phones beyond.
Well, if I can chime in, I know
Yeah.
one thing that has gotten to be huge with small businesses, and that is an app that they can run their entire financial off of. And it includes a point of sale and estimates and invoices and receipts, and they email out to the individual totally paperless. And I'm just thinking for Louise, if she's at a sale, be it a yard sale or any place, she can handle everything. And a lot of these have got full P&L capabilities too, and it flows over to QuickBooks if you end up going to QuickBooks. What's going on is just amazing. And these companies are just handling everything out of an app. It might cost a little more depending on what it is. I know several that, well, I have found that this app, and it's like $29.95 a month for them, but they, and it's a one user. You can add more, but they run their whole business out of it. And we took a close look at it at one time, and it wasn't even beneficial for them to go to QuickBooks because this had such robust capability. It was unreal. And I'm sure there's a lot more, and there might be some that's even a lot less expensive than that.
What's the name of that, Bud?
It's called Mark 8, MARKATE. It's a company that actually, as I found, was in Scottsdale, and it's I've had it come back to me where people have told me about it. Like, have you ever heard this? So it's extremely popular, and it's really good.
Another thing, mobile app is, I have it on my phone for Quicken. I just found it.
Okay.
They do have it.
Yeah, so depending on the
Yeah, I just
capability, but I think for Louise, something that would be point of sale would be really good. You just take care of everything right there on the spot, and it's a done deal if you're selling things that has some kind of a sale.
Does it have to be online while you're doing the point of sale function? You'd have to be on the internet connected,
You probably do.
Probably do. Yeah.
But nowadays everybody has just got the unlimited, just about, unlimited usage, and it connects, and it's not a big deal. But yeah, it's really sweet.
Once they raise the price to $1,000 a month, you're going to be changing that picture. And they will. But as everything, that's the thing. Somebody picks up a lot of market share and eventually jacks up the price until they own it. So anyway, we have used Quicken and of course we've added QuickBooks over the years, but it has been wonderful for most stuff. Again, there probably are, basically apps or online software as a service is the terminology they're using for these things, where you don't actually own the software, you're renting it. Now, Chris might give you a tutorial on using software as a service if it's a CRM, because you stop paying and your data is gone. So I don't know if I'd want to take that risk. I want to own the software and pay a license fee or a usage fee.
I don't want to risk losing any of my information.
Right. And so that's part of reading some of the fine print. You don't want to enter all that stuff and have all your customers, Quicken. We don't, for any good reason, have the tax IDs. I'm quite sure you can. I know in QuickBooks you can have tax IDs, and that's why we keep that close to the vest. We don't allow somebody to do our taxes because all of our shareholder and investor tax IDs out there. And I don't know, but most millionaires are kind of sensitive to somebody stealing their ID. They have something to lose, and boy, talk about costs. So from that standpoint, we're kind of close to the vest on that. In your case, you're going to be dealing with smaller transactions. You don't deal with tax IDs, not an issue. But Quicken probably has the capability. So anyway, I don't sell Quicken. Oh, and a disclaimer I didn't do, I apologize right up front, is I am not a tax attorney nor an accountant. And I've never played one on TV. So the advice I'm giving you is good, but it is not guaranteed, and I'm not going to take liability for you doing something stupid, because it sounded like that's what I said. But anyway, that's typical. Actually, I'm not a big fan of those disclaimers. In most cases, it's kind of like, oh, I got to tell you all sorts of great stuff, but ignore it all because you can't rely on it. My case, I'm sure you can rely on it. It's just a question of whether you go beyond what I was saying and say, hey, every company can run as an sole proprietor. So always somebody could exaggerate. But anyway, let me shut up. I was supposed to take 15 minutes. It took 40. So let me just shut up, and why don't we talk about what others are doing? Any questions, that kind of stuff.
So this is mainly focused at Luis. What clarity, questions, other things that haven't been hit on right now that you'd like to know?
So I love the idea of Quicken and the idea of Market. I'm going to check out both. And quite frankly, I can't wait to download Quicken and get started with my personal finances and my business finances, and trying to divide the two, and trying to see if I want to track both in my personal account, see how that goes. And then eventually, as the summer gets closer, probably mid-May, I'll see if I can open up a business account and track both still through Quicken. How would you handle so over the last few years, I've been purchasing equipment for my business. Would you have that all in a file set up by date and call that good enough? Or would you also put that into Quicken or into a spreadsheet for later? And I'm guessing I'm going to need to hire an accountant to help me with actually doing my personal taxes next year, because this year's taxes won't be due until next year.
Let me comment on both. No, I'm a little bit biased. I'm a finance guy, and the numbers don't scare me. There are some advantages to use an accountant. I do, but we have most of the direct stuff done in-house. Or accountant happens to be my wife. The Productivity Partners handles it. But anyway,
nice.
Let me touch on the first part of the stuff you're putting in. Quicken has, again, it's set up as a checkbook, but account can have lots of definitions. One of the things we had when I started this business, by the way, Productivity Partners, we didn't have the entity formed right away, and it took us a little while. Initially, I bought some properties way before the structure was all built. So I actually bought those in Productivity Partners' name, and eventually sold them to BI Solutions at cost. But in that, we had all that stuff running in Quicken. We set up accounts. Some of those accounts are property and asset and liability accounts you can set up. They're totally separate from your checking account. So you would set up an account that is your initial investment, your startup costs, I guess is what I would call it. And all of those costs would be sitting in that account. So as you spend the money, instead of that money going out the door, it's being added to your startup costs. So that is I forgot what it's called. I haven't used Quicken personally in probably 4 years. So trust me, I don't remember all the details. But you would have those all accumulate in there. Same with, for example, let me use the mortgage on a house as an example. Your house would be set up as an account, and your mortgage would be set up as an account. It's a liability account instead of an asset account. And each month, as you pay your interest, your escrow costs, and your escrow would be set up as the third account. And then each month you pay some principal, you're going to decrease the asset, the principal balance on that mortgage. So all of those accounts interact, and you can set up the exact same thing with your startup costs. Because what you can later do is amortize those, it's not depreciate, it's amortize those startup costs as part of your taxes. I am very big on amortizing and depreciation to make sure that we get the full tax impact of what we do. So in Quickens, you would set those up as separate amounts. You would accumulate the amount that you owe the company, or the company has as assets, but hasn't, started to depreciate them, amortize, excuse me. So those can be done in Quicken, and they are separate from your checking account. So when I use the term, it's like a checking account, that's the look and feel, but it is far from limited to that. Now, one of the other things you mentioned as part of, well, maybe let us set up a bank account separately. And that's good. I wanted to get all of the categories. There are 2 separate, 3 or 4 separate things in Quicken. One is the actual account. So here is my Royal Bank of Canada account, whoever you have it with, doesn't matter. And here's the checkbook for it and all of the transactions. And they can be moved to other accounts. They use brackets for the account type. So they're physically moved from expenses into that asset account. But if I set up categories like PP income, PP interest income, PP other income, whatever else, or PP being, again, productivity partners is my category type. Once I set those up, I can use those accounts in any account. So I don't set up any new structure other than a new bank account. When you set up the company, you would continue to use the same categories for your costs and your incomes. So it doesn't require resetting things up by every account. They are universal. So you have accounts and you have your categories that you have there. I don't remember if they have classes. I mix up QuickBooks and Quicken, but you can then also, I think, set up projects. I just don't recall. But everything can be segregated so that your startup expenses are an asset that belong to you, the company.
Beautiful.
Yeah, using an accountant may be required later. The more you do in something like Quicken, which doesn't require you to do much math, just enter them as they go, will help you decide to make that decision. The bad news about using an accountant, you kind of lose focus on how much am I really spending and how much is going up, because you're handing the shoebox to somebody and they know more about your business than you do. So doing it yourself and running the reports, there are some big advantages. It is an additional hassle, but quite frankly, especially when you're starting, it really has a huge advantage. And again, depending on how you're versed. Now, I filed taxes since I was filed tax returns for my parents back when I was probably 12. So I've been dealing with taxes and taxation, and again, not a tax attorney, but never played one on TV. But on the other hand, I have, in college took tax law courses. So, I'm real well versed, and I'm not afraid. And actually, when I was forced to, when I worked for the corporation, have my taxes, since I was international, have my taxes done by a company. I eventually recouped a lot of money on refiling those taxes, because they did it for the benefit of the corporation, not for me. So I was able to recoup, I don't know, somewhere between $20,000-$30,000 later on, because they filed it differently than I could. Now they're being very, very conservative, but conservative is fine, except when it's costing me money. So I was actually able to recoup a lot of that money because they filed it not to my benefit, but to what the corporation told them to do.
Yeah.
So funny.
I'm not a big fan of accountants in general. I can't even have an accountant joke. I won't share that right now.
So Luis, I'm trying to dummy this down to somebody starting out. And
Right.
obviously, the sooner you can get going with something like QuickBooks or Quickens, which is very good, at least, make a physical file for each one of your receipts. So you've got expenses, you've got capital expenses, like equipment, I'm not sure how much that is. You know, you've got a file for your invoices, you know, that have been paid. And so keeping paper copies of everything is paramount. And even if you don't get going with a entity like that, you know, like Quicken, at least do a spreadsheet, an Excel spreadsheet. The ability to see all of this on paper in front of you on one spreadsheet with what your income, your expenses are, which will also help you decide, well, I need another category or I don't need another category, you know, and doing that is so easy to change. That ability to do that as soon as possible is fantastic, along with knowing how much money do I actually spend in equipment? Well, I think it's this much, but now you find out it's not. You go, you know, so it's keeping things very separate, first of all, which is not easy for people to do. And that checking account, which should be separate. I don't know what your bank is going to require, you know, there for you to get a business checking account, but they will be happy to tell you what the minimum is that you have to do in order to do that. But minimum is start doing that stuff, documenting it as much as possible, keeping it separate in case you want to go back, which you should go back and see things. And eventually you can get into, if it's going to be Quicken or another form or an app or whatever, but you know, making it keep it simple, and you know, you can grow into these other things. But the sooner you start doing that, the less legwork you have to do to recreate it.
Right. That makes sense. And I want to know more. Is it okay if I know we only have like a few minutes, but is it okay if I contact you later, Bud, about the point of sale app?
Oh, sure.
Okay, awesome.
And I just found it by searching, is what I did.
That's
It was, I knew nothing about it. It happened to be for this handyman client of mine, and that's what I searched was handyman point of sale app. And boom, the recommendations of this thing started coming up like crazy. And then I found how this thing has grown. But I'm sure there's tons of others, you know, that are out there that may be a lot less expensive. I just sent it to him. I said, what do you think of this? And he fell in love with it. But you know, it's easy to do. But yeah, just reach out. You know, it's actually, once again, Markate, Markate. And it isn't just for handyman. You get into it, you find out that they've got to advertise for all these other, you know, operational things. But it's amazing what's out there.
So the name actually is ATE at the end for the 8, as opposed to the number 8 or something. I assumed it was Mark 8.
Yeah, no, it's ATE.
ATE. Okay, interesting.
Yeah.
But you talk about entity naming. There would be an example where, you know, even though they might conflict with what used to be called a Mark 8, which
Yeah.
is a model of the Lincoln, I think it was, or Mercury, one of those two. You know, I don't think anybody would confuse software with a car, but nonetheless, they probably wouldn't get stopped with it. But you know, there's an example where somebody could say, "Well, I don't want them using that name. That's registered for
Right.
the Ford Corporation. We can't touch that name."
But this thing is surprisingly robust. And after talking with some small businesses and find out what they're doing, you know, they're doing, before they leave, if they've got a home service, they've got to reproduce a pest control service or a pool service or whatever. They've all got these apps. Their finances are done basically before they leave the house. Everyone gets an email. Here it is. Boom, it's done. If you ever have someone do the service and you're sitting them out, you see them sitting in their car or their truck afterwards before they leave. That's what they're doing. Yeah.
wow.
No, the world is changing in that regard. There's
Yeah.
no doubt about it. More
Yeah.
of that stuff. Again, as you get larger, then you start worrying about, the Chris types of history. It was great fun listening to his history on the CRMs. But what happens if you decide to stop paying, or that company goes out of business? Can you export your stuff out of there? Can you move it to a backup that you then can use? I don't remember how it is with Quicken. I think you can send all that stuff out to CSV files or something crazy like that. But those kinds of things you never think about at the early stage. But with all of these apps, will I be able to transfer now? Somebody like Quicken, everybody's going to have the capability to use the Quicken, read the Quicken file because they're so big. So, those are things that eventually become an issue. I'm particularly sensitive about that because of the data we have in our business. But for most people's, personal finances, I don't know how much of an issue it is. But I can tell you there isn't much access into our Quicken to know how much money we have and what accounts and what those account numbers are. Actually, the account numbers we don't even put into to Quicken. Oh, I'm sorry, we do in order to download. So anyway, those are things that downstream you have to worry about. But as long as you're dealing with a reputable company, you should be okay.
Yeah, almost everyone has that nowadays. So
Export
Cynthia, comments?
Well, yeah, I just want to say, Ron, I'm really intrigued because when I started my previous business decades ago, when I was in making custom draperies and things, and I had a
2 years old. Yes, I understand.
Yeah, exactly. I used QuickBooks, and back in those days, you went to the store, to the office supply store, bought this ROM and put it in your computer. It was very good. So then when moving forward to my independent agency 9+ years ago, I did QuickBooks online. Total disaster. Hated it. They created a $500 and some error somewhere, and they couldn't find it. I couldn't find it. So I said, forget it, I'm done. And I moved back to just QuickBooks for my agency, like software, so that I was more in control. I've used Quicken in the past for personal finances. And now that I'm at a stage where hopefully going to be selling my agency and opening up a couple of small businesses, I'm intrigued. I'm going to look back into Quicken because I like the idea of having it organized in one place, because being on a budget, a shoestring budget like Louise, I've put everything on an Excel spreadsheet for now, but eventually I would like to get to the point where I put it into something like Quicken. I'm intrigued even more so because it sounds like Intuit no longer owns them, because that's my biggest beef. I don't like Intuit. I don't like the way they handle things. I'm not a big fan of theirs, and that's why I kind of totally did away with QuickBooks. And I've been looking even for my agency for the past 2 years for a good accounting software, because honestly, with an agency, we track, somebody told me these little phrases, goes intas and goes outas. It's very basic. We have expenses and we have income. That's it. We don't invoice people. We don't have to do all that fancy stuff. I have a totally separate company online that I do for payroll, because it's just really myself and one staff member. So I don't need all that extra fluff. And it's like impossible to find something. So I'm very intrigued about Intuit, because that might be even the answer for the agency for this year.
Quicken.
Get it all together.
Yeah. Okay. Well, looks like we're about there. Anyone else have any parting comments? Questions?
Thought it was great.
Okay, very good. Very good. Thank you, Ron.
Yeah, no, it'd be helpful eventually. It'd have to be a side topic. I'd be curious what others do. Like Mark has got to be set up some entity. Chris may be a little different because you're kind of an agency or an individual, whatever, a group that works for a group or something like that. But how you're structured and what you've chosen to do, and that might be helpful for Louise as well. So just in terms of what others are actually doing, Tom probably has at least 3 entities. Well,
least.
two entities exactly, because, well, but they're separate businesses. So I'd just be curious on how you've chosen to do what you do, including maybe what you use for the accounting, because it may be useful for future, people, including, clients of Bud's. Just what people are doing. Ours is a little more complicated than most, so I don't want to use me as an example for sure.
Right. Okay, well, maybe we'll do that for next week, where we can go around and see what everybody is doing, get a little more insight. Before we go, I just want to let you know that the question was, where was Patricia? So it was probably about 20 minutes ago. I got a text that says, nothing's wrong, just woke up late. Sorry to miss everybody. So everyone was wondering where she was at the very beginning, because she's usually here 15 minutes early. So those sleeping pills do work, I guess, and sometimes overtime. I don't know that I should have said that, but anyway, she slept well.
Either that, or she was afraid I was going to get into gory detail on everything and just didn't want to go
Yeah.
to sleep while they're in the meeting. Could be either one of those.
Okay, guys. Well, good meeting. Thank you again, Ron. And next week we'll discuss what you do. Sounds good, and that'll give Louise some time to digest this and come up with other questions too. Okay. Okay, guys. Thanks a
See you
lot. Have
later.
a great day. Enjoy the weather before it gets in the 90s.
Take care.